Hi, welcome. It's Mary Ellen McGonigal here with your weekly Edge show for Saturday, March 12th. Today, we will go ahead and take a look at some of the more impactful news that drove price action last week, another volatile period in the markets. And then from there, we'll take a look at where the markets closed for the week, and then even beyond that, some of these underlying sectors as rotation continues to take place. And then last up, viewer question of the week, and it's all about how you can take advantage of this move into commodity stocks. I'll share a couple of my favorite names toward the end of today's show. So first up, the news from last week: Russia is continuing its move into Ukraine, and it is, of course, impacting the broader markets as supply chain issues are expected to be impacted continually, as well as higher inflation. We did see inflation actually rise again with the release of the CPI report. In February, it was up to 7.8%, the highest in 40 years, also moving the markets. And then March consumer sentiment did drop, and it came in below estimates as consumers are eyeing this increased cost of gas and food as well as housing. So consumers may retreat in the way of less spending. Next week, the Federal Reserve will be announcing the amount of their rate hike, and that will take place on Wednesday. Anticipate a lot of volatility around the release of that number. Also, retail sales for February is going to be reported, as well as select housing data that's going to be coming next week. So let's take a look. Where did the markets close for the week? Sharing with you now a daily price chart of the S&P 500, and we can see this deterioration is continuing to take place. If I were to say a bright spot, one is the fact that the markets did close above this late February low that we saw in the markets. This 4,100 level is this next area of potential downside support. However, we were down for the week with this RSI continuing to trend negatively below this net neutral 50. The stochastics, while they did dip up subsequent to a midweek rally, they are in negative territory, and overall the trend for the S&P 500 remains negative. Let's move on from here and take a look at some of the underlying sectors within the S&P 500. This is a daily 2-month price chart of these 11 sectors. I'm going to go ahead and update it because I've added this RSI, that relative strength indicator, and that in turn will sort this list so that your relatively stronger performers are up here in this upper quartile and your weaker areas down below. First up, we've been seeing energy up at the forefront for the last many weeks here, certainly since the beginning of the year. This is a daily price chart of that energy sector. The only sector in the green for the week, it was up 3%, remains in a confirmed uptrend. Next up is utility sectors, real estate, and healthcare. Each of these areas are generally defensive in nature, really pointing to investors' uncertainty and their gravitation toward these higher yielding stocks that are in utility, REITs, and healthcare as inflation continues to rage higher. Moving along in this lower quartile area, we can see financials trending downward. Still, they were down just a little bit less than the broader markets, but still in a very confirmed downtrend. We can also take a look at some of these other growthier areas: communication services, that's internet related, as well as technology, down in this lower quartile and trending lower as growth stocks remain out of favor. So from here, we can drill down a little bit further and take a look at sub-industry groupings. I've gone ahead and added ETFs, again, a 2-month daily price chart. and RSI indicator here, descending order. Earlier, I mentioned focusing on commodity-related stocks. These areas are doing quite well here of late, gold being one of them. Not only is gold a safe investment during these trying times, but also gold fares well during periods of high inflation, such as where we are currently. Gold stocks up about 1% for the week versus the S&P down 1.7%. So a very orderly pullback to this 10-day simple moving average. We'll be keeping a close eye certainly on gold as well as some of these other commodity related stocks. This is Brent Crude Oil. It did pull back fairly sharply this week. However, it also had an early week spike up to $140 per barrel. That's well above the average going back historically. We can see that this pullback does still keep the oil group in positive territory, but it's certainly due a pause as it relates to oil prices. From here, volatility subsiding just a bit, but it's nice to see it not up at these peak levels. We did close above 30, which is still quite elevated. We'll keep an eye on this fear index as high volatility is not good for the broader markets. Some of the other underlying groups that we can take a look at are going to be growth oriented. That is the health products and medical devices still very much in a confirmed downtrend. And then also we can see that software stocks, IGV, remain also in a very confirmed downtrend, another high growth area that's very much out of favor. From here, I did want to go ahead and share with you a couple of stocks that are on my radar as looking really quite compelling in the current high inflation, rather uncertain period in the broader markets. First up, I will share with you a company that is in the shipping industry. Eagle Bulk Shipping, EGLE is the ticker symbol. It's a bit of a small company, 800 million in market cap, but it does have a number of characteristics in its favor. First up is the fact that the stock, despite this run-up, is trading at 5 times its trailing 12-month earnings. That's a very low multiple relative to the average PE of 17 times for all stocks in the S&P 500. The company also offers a very high yield, 13.5%. in the way of dividends. Also, they did just recently report their earnings on March 3rd. Q4 was at $4.28, well above estimates. Management also guided higher as it relates to growth going forward. The uniqueness with this particular company is that they do specialize in transporting grain and coal. These are dry bulk commodity products that are very much in high demand. So there's anticipation that the stock could continue to trend higher. I'm going to add a shorter term moving average here just so that you can have a sense of where the stock is finding support. So this is a 5-day simple moving average. EGLE is continuing to find support. Pullbacks to this 5-day have proven to be an ideal buy point for this uptrending stock. Next up, another company that we can look at is very much centered around oil. The ticker symbol is OII. This is Oceaneering International. The stock just this week broke out of a 5-month base. I'm going to go ahead and mark this chart up so you can see what I'm seeing here. The stock is in the oil industry, but they specialize in oil and gas field services, and in particular offshore deep water oil and gas exploration, which has really been picking up in demand here. I'm going to go ahead and save that, and this is the move that I talked about as far as breaking out of that base, doing so on very big volume. We can see that the outside momentum indicators are positive, the RSI trending upward and above 50, and likewise with this MACD, it had that black line up through the red, which was signaling a move in an uptrend. It's not a particularly large company, 1.6 billion in market cap, but the growth numbers are really superior. This year, there's anticipation of 141% growth in earnings. Next year, 73%. And the company has received a number of price target upgrades here recently, given the dynamically strong outlook for the stock. This particular company is in a buy zone after pulling back from a Tuesday spike in price. I'm going to leave it at that. Everyone have a great weekend, and I'll look for you here again next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.